It's been secular trends across the board for the last 3 years. A secular uptrend in equities and gold, and a secular downtrend in oil and treasuries. Consensus is extrapolating these outcomes into 2026, expecting what seems to be an impossible trinity of earning strength, monetary accommodation, and fiat debasement. This may well be too much to expect. For a start, volatile, not secular, is how we see the year unfolding. Volatility led by uncertainties surrounding inflation, commodity prices, AI monetization, and of course geopolitics. Our major calls for the year, or perhaps I should say the quarter. We certainly think that investors should play the quarter, not the year, expecting volatility and harvest it. From a macro perspective, inflation is the key variable to watch. There are upside risks that in turn risk the path for rates, and in tandem, the outlook for growth sectors in equities and bonds in general. And talking of bonds, treasuries offer better value compared to corporate bonds, but there are risks to both, with limited pockets of value, mostly in European financials. Looking at equities, earnings delivery is more critical than ever. Priced to perfection, the room for error is minimal. Within equities, and specifically for the US, expect dispersion favoring hardware over software in technology. Across sectors, industrials, healthcare, and financials do stand out. Internationally, India is our favored emerging market as a quality low correlation diversifier. And in North Asia, tech has been on a tear and remains the place to be. While the top-down case for Europe and UK is lukewarm at best, there are AI beneficiaries in the industrial space. Additionally, luxury appears better positioned after a tough year. Away from financial assets, gold is a core holding but expect higher volatility. Silver appears more speculative and susceptible to unwinds. Commodities other than gold remain well bid, risking inflation. In particular, watch oil for sustained rallies and the associated risks to inflation. And amongst the currencies, the dollar has headwinds for sure, but don't write it off just yet. Rather than debate the consensus, focus on implied scenarios and narrative discrepancies, and that will shape the investment outcomes in 2026. This is Sunil Garg from Lighthouse Canton.